Hello guys. Hello guys. Welcome back to Global SMC Forex Trading. I think it's been a long time since I uploaded the last video, but I know people are really very interested in this topic that I'm going to be talking about today. How do you grow a small Forex trading account, right? So you are going to see that it's not that all of us, we have big accounts. There are some people who really have small accounts as to $10, 15, 20, 25 to even 100. They are still small accounts. So let's say now you have a small account. You want to know how best you can manage or how best you can go over your small account into Forex trading. So as I have written here, guys, as you can see, there are just 3-4 things that you're supposed to know before you get into the actual Forex trading. So what are we saying now? For you to be able to grow your Forex account, right, you have this whole system that I have drawn here. This is a system, you can see, right? The one that I have highlighted here, this one, this is a system that you're supposed to know. If you know this system, right, you go and try it and test it. If it works for you, then you start to implement. So now what are we saying now? For you to be able to grow your account, right, there's something that we call number one. This one should be number one. This one is our number one. We're going to be explaining everything step by step, right? This is what we call a lot size, right? The one that I've highlighted, number one here, a lot size. So what is a lot size? A lot size, we're just saying, is a quantity. It's a quantity of the amount that you are willing to lose, right? So, or to even gain. It's not always about losing. So what are we saying now? If you go on to MT4 or MT5, you're going to see, right, that when you're trading, you're going to see that on the application, there is what you call the unit sizes that will be there. Let's take, for example, to people who really know it, maybe like 0.01, the lot sizes. Sometimes you see the 0.01 like this, right? The 0.01, you can see the 0.01, you can see the 0.05. These are just lot sizes, or even 5, even 50, sometimes even 100, right? But now, how do you use the lot sizes? The lot sizes is just nothing, but it determines your account size. Yeah, I don't think that using the lot size is something that makes you profitable. No, it just depends with your account size. Your account size is something that will determine the lot size now. So how do you go about all this process, right? You have to know something that we call risk management, right? Risk management, we are just saying the amount that you are willing to risk, or the amount that you are willing to lose, or the amount that you are willing to win. That is something that is going to determine your profitability, right? So let's take it into a real good example. Let's take it in a real good example. So what I will say now, let's assume that you have 20, you have like $20, right? I want to use that system so that you understand what I'm trying to say. So let's say now you have a $20, right? And you're saying you want to trade this $20, right? How do you trade your $20, right? So the first thing that you're supposed to know is the lot size that you're going to use, right? So number one, you have to know the lot size that you're going to use, right? So as of me, what I would recommend, or what I think is the best, especially if you're a beginner, is to use 0.01 to maybe 0.1 lot size, right? This is the lot size. We are talking about the lot size here. So let me make this big so that you really understand what I'm trying to say. Okay, let's make it 20, right? So what are we saying now about the lot size? We are saying every trade that you are going to be entering, we are willing to be using 0.01 lot size, right? Now, after the lot size, right, let's assume now, or let's use the RR, or the risk management process. How do you see the risk management? You use these tools. Let's say you are using these tools. I think most of you even know how to use this kind of system, right? And I know that you know how to use them. So how do you use it now? Okay, so let's go on the actual thing. Let's go on the actual thing, right? Let's assume like this, right? Let's say, okay, right? So now let's say maybe you're entering a trade like this. Maybe your trade was going like this, maybe like this. or maybe you want to get involved yourself like this, right? So here I just used something that we call a ghost feed. A ghost feed is something that just mimics the actual market, right? So let's say maybe you've entered this trade, right? You've entered this trade, right? And you're targeting what? Wherever you're targeting, right? So what are we saying in terms of profitability? We're saying here, you can see it's return risk to reward ratio. This is something that makes you profitable. The amount of money that you're willing to lose per trade as to the amount of money that you're willing to even win per trade, right? So if I had $20, what would I do, right? If I had $20, I would say for every trade, I'm willing to lose, let's say, $1, right? I'm willing to lose, right here. Let's say your loss will be what? Your loss will be $1, right? Your loss will be $1 like this. Your loss will be a $1 like this, right? This will be a loss, right? Let me write it like this. This will be a loss. Then your profit again here. We come here again, then here. So we are saying every time that you are going to win the what? Every time that you're going to win the trade, every time that you're going to win the trade, you're going to be what? Winning what? Like $5, right? You're going to be winning what? $5. So if you develop a system that every time that you enter the trade, if you lose $1. If you win $5. So you're going to see that it will take like 20 times for you to actually blow your account, right? So what are we saying now? Let's just now assume that maybe you went into the trade, right? Then maybe you win 5, maybe 5 or 6 trades. Then you lost what? Of course, now you lost 14 to make them 20 because you are losing $1 per each, right? So let's say now you win 6 and you lost 14. How do you calculate this now? This is all about mathematics, right? So if you know how to use your mathematics, right, you'll be able to what? To even understand how you're going to be managing your trade, right? So let's now do the mathematics. So if you win 6 trades, we are saying 5 times 6. We are saying 5 times 6, which is $30. Which is $30 like this, $30 win, right? $30 win right here. We have returned $30 win. So if we lost 14 trades, we're saying dollar is a loss, 14 trades. So dollar times 14, which is minus 14. So here we are saying 30. So here we are saying 30 minus 14. 30 minus 14, which is equal to 16, which is equal to 16, right? Which is equal to 60, right? So let me place here. So 13 losses. Let me write loss here. 13 loss minus, right? So 30 wins minus 40 losses goes to 60, right? So what are we saying now? Your initial amount was $20, right? But imagine you lost 14 of them, and you only win 6, but you have lost maybe like $4 of your account. So people, they really think that losing too much means that you're going to blow your account. No, that doesn't mean anything. If you just use the same strategy, using the same concept, it will make sense, right? So now let's change here again. Let's say here you won 10 or maybe 9. Let's say 9. Then of course here you lost 11, right? So what are we saying now? If you won 9 times 5, which is 45. 9 times 5, which is 45. So we are saying here, you have what? You have $45, right? You have $45, right? So here, your losses. Here you have what? 11, right? $11, what? Losses. So how do you calculate now the profit? So 45 minus 11, which is 34, right? Which is 34 now, right? So see now, your initial was 20, and now you have $34, which means you now have what? 14 profit. You see now, guys, this is what we call risk management. If you have a system that you always follow up and always respect, especially in terms of lot sizes, you're going to see that with time, if you become dedicated with this system, and you follow up with this, you're going to start to be profitable, right? So how do you measure the risk management here? If you check here, it's returned 2.5, right? So if you want to change the risk to reward ratio, right? You go here, you can go here, right? Maybe here, what should I do? Let me just use this so that you don't get confused. You just drag your blue button here until it's returned 5. Let's drag it, let's drag it, let's drag it like here and put exactly. So you are seeing that here is return risk to reward ratio 5. So what are we saying now? If our trade moves maybe to here, par, right? If it goes to this take profit, that means you have what? You have $5. But if it goes against you, right? If it goes against you, maybe you decided to go above your stop loss, you lost $1 instead. So this is how you actually go about it. So now let's go back to the actual thing now. So what are we saying now here? So for you to grow your account, right, to the way that you want, you have to implement the this strategy, the stop loss, the break even, and the targets. The stop loss, the break even, and the targets. So assume that your target is 5, right? Here, or maybe 100 pips, or maybe 1:5, and your break even. How do you do the break even? Or what is a break even? So a break even now, we are saying when the trade is going to your actual direction, how are you willing to manage it, right? As of me, with the time frame that I use, I just assume that when the trade is going like this, right? Maybe if it comes here like this and forms a first break of market structure, right? This is when I lock my trades usually. I lock my trade here on this black line so that if it comes back to this black line, I'll know that I'm not winning or gaining anything. Because if the trade comes here, if the trade comes to this point, guys, let me show you this point. I'm talking about this actual point. This actual point that I'm talking about, this one, this black one, exactly. If you lock your trades to break even, if the trade comes to this point, right, you're not losing or even gaining anything. You understand? This is what we call what? A break even. So you're going to see that break evens that are really necessary, especially in terms of what? If you don't want something like drawdowns in the account. But some people that are really greedy, or some people they don't have a system. When they are seeing the trade going down, they just assume that it's going to my target. Yet you're just going to be surprised that most of the time it can even go there halfway before it comes back to even tap your what? Your actual what? Your actual trades. So it takes, sorry, I was closing the door. So now it takes much practice, or it takes a system that you're supposed to build for you to actually be able to cooperate all these concepts, you understand? So the matter of going in account is what I have told you guys, a system. If you use the system of these 3 things, a lot size, risk management, target, and how to even use it. So now I want to teach you something new that I have never taught, I think, how to incorporate the lot sizes and the pips. So you're going to see that basically, what are we seeing now? This is something that I know people don't know much about, or they don't take it maybe seriously. 1 pip is equals to 10 ticks, right? 1 pip is equals to 10 ticks. What are we saying, right? If you check these numbers, here it's written 1.6659.78. These 7, those are what we call ticks. So we are saying 10 of them is 1 pip, right? So we're going to see that for you to know which lot size that you're supposed to be using, right? You say, let's say maybe you want to risk 2 pips, right? You want to risk like $2, right? You just say $2. You just say $2 divided by what? By 2, right? By 2, you're going to see that you get 1. Then after getting the 1, you just move your number to what? To 1 decimal place, which is 0.1, which is 0.1. So you're going to see that when you want to be risking like $2 per every trade, if you are using 1 pip stop loss, you're supposed to use 0.1 lot size. Yeah, I think this is new, and a lot of people, I know that you are happy to know this. This is a lot size, right? This is the lot size that you use. Let's do another example. Right. So guys, you're seeing that this thing is all about mathematics. If you are really good at mathematics, calculating your things before you're going to trade, you're going to be profitable. So now let's do another one. What I will say now, let's say you have a $20 account and you want to risk $1. And you want to use maybe 10 pips stop loss, right? You want to use 10 pips stop loss, right? $1 divided by 10 pips stop loss, you're going to see that you get 0.1, right? 0.1 like this, right? After getting 0.1, you move your decimal to right by one step, which becomes 0.01. So it means you'll be using 0.01 lot sizes. This is how you relate, or how you came up with the issue of lot size. If you have struggled with this, I'm going to be doing it, I think, in another next video. I'm going to go deep about this, but this is actually how you relate pips, ticks, and lot sizes, right? So once you master all these things, guys, that I was trying to talk about, you're going to see that even if you go, let's just do maybe one example in the actual market, right? Let's say, as of us, you know, guys, we are smart man traders, right? So let's just assume that maybe you are interested, right? Maybe with this demand, and you're assuming that if the price comes here, it's going to buy, right? I'm not saying it's going to buy, I'm just doing it for educational purposes. So let's say it's going to buy here. You highlight your trade like this, right? After highlighting a trade like this, maybe you use the same concept that you are talking about. So let me reduce the lot size maybe to around, maybe let's say just 10, because I know people are used to 10, or maybe 5. Let's use 5. Maybe 5. Let's use 5. Okay, let me use this 2. Let me use this 2 so that it will be fast for us to do what you want to do. So here, we're just saying here is 500, right? So here, plus 5, which is 2,500, right? Of course, we use 2,500, right? So here, we used 0 as 2, like 1:5 risk to reward ratio. So what are we saying now? Let's assume now that maybe, let me just move it to the actual trade, right? Let's say the trade they have tapped, right? So here, let's say we have assumed that we have entered the trade now. We have entered the trade now, guys. Let's just assume that this is the real trading chart, right? We have entered the trade, right? Now we are going to that direction. And here we were saying we're targeting what? $5, right? You see? Here we're targeting $5, right? And here we know that if it comes here and taps us, we are going to lose what? We're going to lose $1, right? So your duty is not to be worried about losing. I'm going to lose. It's going to come and tap my zone. Don't worry about that. Just be focused with the system. This is a system that I'm talking about, right? So as of me, if I was a newbie or someone who's learning to do forex trading, I'll just write it like this, and I'll be assuming things like this. Or let me wait for either minus $1 or plus $5. Understand? So you're going to see that if you have a $20 account, there's no way that you're going to lose all of them. No, never. You're going to even lose maybe like 4 or 5 or 6 of them, even if you don't know anything, if you just implement your strategy. Understand? So me, as of this trade, and I don't know what it's going to do, or maybe it's going to buy or sell, but I didn't say it's going to buy or sell. I was just trying to explain this in terms of smart money, how we feel the actual market, right? So this is how you do it, guys, now. So I think for this video, I've said a lot about how to grow your small forex trading account. So let me just say it in brief to the people who just want to understand everything in short terms. So what were we saying now? We're just saying for you to be able to grow the forex trading, it's just a quantity that you are willing to be using as the trade is going either to your direction or vice versa. Understand? You're going to see that the more you use the higher lot sizes, the more you are gaining more money. The more you're using less, the more you're gaining also money, but in small quantities, you understand? So after that, there's something that we call risk management, which is here. Risk management, we're saying risk management is the way how you manage your money or your account or your equity as it's doing, everything that is doing on the forex trading account. So the stop loss now, we are just saying a stop loss is this red section, which is here. We are assuming that if we are buying or selling, right, if the price comes to our stop loss, how much are we willing to lose, right? This is something that is going to determine us that are we really profitable traders or are we not? Then the break even, we are saying as the price is going to our actual direction. Now I'm going to break even. What's your strategy? Yeah, I've told you, I like to use the break of market structure, the first break of market structure. If I see the market doing a break of market structure, I assume that this is the next, or this is another supply which is being formed here. So there's no reason for it to go above this. That's when I start to lock my trade, right? Then I'll leave them to run, assuming that if it comes back, it's a break even. If it goes to my direction, it's my profit instead. Then about the target, our target, we are saying those are the rewards now. This blue zone, or this one that we have written, $5. This is what we call the what? This $5. This is what we call the target. So your targets are the ones that also even allocates or tells you that are you really a profitable trader. You can even use 10, you can even use 20, 100, or maybe 2.5. It just depends with the way how you want to grow yourself. But I think 5 will make sense instead. After targets, right? This is when I was just explaining here how to use your $20. You understand here? I was teaching you how you can manage your trade here. That if you have $20 account, you can just assume that you are losing dollar, winning $5 per every trade, which means randomly, if you just win 9 trades and you lose 11 trades, you're still going to be profitable here. We worked out how we do it here. 45 wins. We said this is 45 wins, right? We said 45 wins minus $11 loss, which is $34, right? $34 from 20, we have gained $14. You see, this is how we do it, right? So, and here I was saying, how do you relate the pips in the ticks and the loss size? So 1 pip is close to 10 ticks. So if you are risking $2 per trade, you're saying if you say $2, right? $2 divided by your what? Divided by your pips that you are risking, you're going to see that you get 1, then you move the decimal place to the left, right? Then you get your loss size. Same here. If you are risking dollar, right? You want to use your what? 10 pips. You just do the same. You get 0.01. You move your decimal place to the left side. Then you start to use 0.01. So you see, guys, these things, they sound really interesting. If you try this and test this and make yourself a system, you're going to realize that this is going to make you a profitable trader. Technical analysis doesn't really actually matter. It's a skill that you develop with time, and that skill will take much of maybe psychology or even your health status and all those stuff. You're going to just know it with time. But these things is what really matters the most. The ones or the things that you plan for yourself before you start forex trading. So thank you guys for listening to this video. I hope you're going to enjoy the video and start to implement everything that I've been saying here. Thank you for your time. This is Global SMC Forex Trading. Oh, our trade here, we lost our dollar. I know now. I told you guys here, this is not how we do it. I was just explaining. But for the entry strategies, you can even check my other videos, how you enter this trade. Understand? So thank you for your time, guys. I really appreciate it. Let me bounce.